Greetings and happy Wednesday. This is MJ Bridges from YoungandDebtFree.com, and I'm very excited about this webinar. First off, this is my first webinar, so thank you so much for watching it. Please share it. Please email me. I'm going to give you my email at the end of this so you can critique me, or you can also ask me any questions that you may have about credit scores or your personal finances for that matter. I'm very excited to build this platform and relationship with you. So let's go ahead and get started because we have about 15 minutes to get this done, okay? We have three objectives. I'm going to share with you the factors that make your credit score, tips to raising your credit score, and how to look up your credit report. If you have a piece of paper and pen, you can put it next to you and maybe just write down a question that you may have as I go through the slides. But you can watch this video over and over again. So don't feel like you're inclined to or pressured to write down notes right away and things like that. Credit score factors. 35% of your score is based off your payment history. Okay, and again, I will explain these in slides to come. 30% is the amount of debt that you have. 15% is your length of credit history. 10% is the amount of new credit, and 10% is the credit mix. And off on the side, I added some few terms that's very important and things that you should get used to. Patience. Patience. It takes patience to build a credit score, to keep an awesome credit score, to or rebuild your credit score. Maybe you used to have a high credit score and it just went down to the ground, and you have some financial difficulties and you have to build it back up. It takes patience to do that. So please be patient. Figure out what patience look like for you. Discipline. Discipline, discipline, discipline. I think discipline cures many of things, even especially in the financial world. So discipline, it takes discipline to build a good credit score and create those great financial habits. And experience. Experience, of course, is a teacher of many things. And once you experience, downfalls and good things, and you will understand a little bit more about your credit scores and your financial health for that matter. So patience, discipline, experience, and of course all the factors that the lenders use to make up your credit score, and that would give you an awesome score and also an awesome financial health. Payment history. 35% comes from the payment history. And guys, it's kind of, I think, common sense. Yeah. This, what does this include? Or I like to say, or what you should avoid is late payments. Late payments over 30 days, collections, derogatory public records, late payments over 60 days, and having no delinquent accounts. Okay, so a lot of this is just, of course, when you owe someone, so if you owe a lender, or say, for example, if you owe someone $20, maybe a family member, and you say, I'm going to pay you back on the first of the month, and you don't pay the person back on the first of the month, well, you're creating a negative history with that person, negative payment history. So same thing applies with the lenders. If you're late after 30 days, it's going to be reported on average, for the average person. I'll talk about that shortly, why for the average. If you're late over 60 days and 90 days, these are bad things on your report, and of course it will result into having a horrible credit score. 35% of your payment history. Recommendations, and my recommendations or tips are based on research that high FICO score achievers have. These are people that are 775 and up, going into the 800s. These scores, excuse me, with that, you should have no missed payments or late payments. It says 96% of achievers have no missed payments. Of course, if you do, let's start now. Let's start a new habit and not have any missed payments. Collections on credit reports. Again, collections are when the when you don't pay your bill and you haven't paid it over a period of time, now the lender has hired another company, like they have outsourced it to collect the debt from you. So these collection companies, they call you, okay? They call you to simply collect the debt that you owe for another company, okay? So no collections on credit report. Only 1% of achievers have collections on their credit report. So if you have a collection on your credit report and it is indeed your bill, pay it off. Now remember, collections will stay on your credit report for 7 years. Okay, it will stay on your credit report for 7 years. If it's not your bill, if you see a collection on your report and it's not yours, you have the right to dispute it. Okay, you have the right to dispute that. And again, shoot me an email if you have any questions about that, and I will share my email at the end of the presentation. No derogatory public records. Guys, this includes garnishments, bankruptcies, and tax liens, things of that nature. 99% of achievers have no derogatory public records, okay? So if you want to be with the high achievers, these are what you should be trying to achieve, okay? And if, again, you have these, work on them, work to get these corrected, and create a new habit and lifestyle so you may be a high FICO score achiever. 30% is the amount of debt. So what does this include? Revolving utilization percentage. And this is the ratio of the sum of balance divided by the sum of the credit limits on revolving accounts. Guys, revolving accounts are your major credit cards, store credit cards. Those are like the revolving accounts, okay, where this debt kind of just revolves. You know, you pay it up, it goes down. It's not over a long period of time, as in an installment account like a mortgage or a car loan. Those are called installment accounts. So revolving accounts, simply major credit cards, store credit cards. Also, how many accounts have balances? So we'll talk about that shortly, and a total balance on your revolving accounts. So the amount of debt, the revolving accounts are big here. Recommendations or tips. You should have a revolving utilization percentage of 6% or less. Again, this is what the high FICO score achievers have achieved on average. No more than 3 active accounts with debt. No more than $3,000 of total debt in revolving accounts. So I'm going to give you an example of the revolving utilization percentage down here, and then I'll talk a little bit about this. Example, if you have 2 credit cards, let's say credit card number 1 has a balance of $250 and credit card number 2 has a balance of $475. Total, they have a $725 balance. Your credit, but your total credit limit is $2,500. Now, if you divide that, that's a 29% utilization. That's not a good percent. 6% is what the high FICO score achievers have achieved over time. And to figure that out, so you have $2,500 of credit, okay, total of credit, and you times that by 0.06, which is 6%, and you get $150. So this is the balance that you want to stay near when it comes to both of these accounts, okay? So again, I like to say roughly 6 to 10%. Again, the high FICO score achievers, and from the research, it says on average 6%. So you give a little deviation there, 6 to 10%, I think will be fine. But again, these are the examples. 15% length of history. What does this include? Average age of the account and age of the oldest and newest account. So my recommendations here, again, you should have little to no new credit inquiries. You don't want to have a period of time, especially a period of time where you're applying for credit cards. Maybe that will show them that you're frantic, or maybe in an emergency situation, which we get into emergency situations. But if you continuously applying for credit, especially within a close period of time, that's a really bad look. So you want to have relatively a long credit history. So you want to have your credit cards for a long period of time. A long period of time. Um, Also, you should have not closed or be thinking about closing credit card accounts. Keep them open. Keep the accounts open. If you even if you paid off a card, keep it open. Now, mind you, some cards charge an annual fee and things of that nature. So you have to kind of give or take and figure out where you fall at in that place. But you don't want to close the account. The longer your credit history, the greater chance that you will have a higher score, or at least this category here, or factor here, will do really really well. And again, most FICO score achievers have had their credit cards for almost 20 years or so. So again, you want to have a card and just do well with that card and have a long credit history and not have multiple inquiries within a period of time. And I want to say within a year. You don't want to continue to keep applying for credit cards within a year and different type of credit. 10% amount of new credit. What is this? What does this include? How many new accounts have you recently opened? So it's almost going back to the last one as well. And whether you've been rate shopping for a single loan or applying for multiple new credit lines. So again, it sounds very familiar. You should avoid applying for multiple lines of credit within a year. Also, keep the average age of applying for new credit relatively long. So you don't want to, again, apply for multiple lines of credit within definitely a year. And if you are going to apply for lines of credit, keep it, you know, one time in 2016, and maybe you don't apply again into 2018, 2019. Okay, so you want to establish that again. So that's what the recommendations are for 10% of amount of new credit. Your credit mix. So credit mix includes the different types of credit accounts being used or reported, and including credit cards, retail accounts, installment loans, mortgage loans. So again, installment loans are those like car loans. Mortgage loans would be like an installment loan. So here they're looking for have you managed credit in different forms of credit well. Your credit mix would be more important if your credit report doesn't have a lot of information here. So um, the recommendations here, you should have at least one bank account, one bank issued major credit card, excuse me there. You should have at least one store credit card. And if it's not avoidable, have one installment loan like a car loan or maybe a student loan or mortgage. I put an asterisk there. I mean, if you if you have the cash and you can pay for a car fully, or your student loans or for college or a mortgage, anything like that, of course don't just take it out. I wouldn't just take it out. I think the big important part here is to have a major credit card and a store credit card and show that length of history with that. Pulling your credit report, and this is a really quick and basic information. Go to annualcreditreport.com, and the FCRA and FACT provides you to a free personal credit report each year from each of the three national credit reporting agencies. So you can request that online or by phone. Again, this is what it looked like, guys. Do not go to any other website. There's many other satire websites and websites that get your money. This is what the front page looks like, and you can request a report down there. Again, this does not give you a credit score. This gives you your credit report. Okay, and again, do not enter any information with a credit card or anything like that. You're probably on the website if that on the wrong website if that happens. That is it. So again, that was quick. And thank you very much again for coming. Please email me, mjbridges@younganddebt-free.com, for any questions that you may have about credit scores or personal finances. I want to create a relationship with you, and help you build that financial future.